What's up, everybody? It's Marco from Digital Dash. Today we're going to be doing some quick analysis on ES, SPY, QQQ, and NQ. We're just going to be looking at how the market's setting up so far and what we can expect for the week and how we're going to trade it. I'm going to be giving you guys both the bull case and the bear case because we're really at critical levels again this week, so it could really go either way. So we're going to try to prepare to trade both sides of the market. So starting off real quick, let's look at ES first. This is what I'm trading. ES, if we look at these little blue trend lines here, we've kind of been trading between this little range here, right? So we have been trending up, but this channel has been getting more narrow as we get higher, and we're also coming into these levels of resistance that we've seen in the past. We're coming into this big supply zone that formed back in September, August and September. It was tapped in September. Since it was already tapped, that leads me to believe that it's weaker here. So price could definitely come past this point, past this 41.72 that it tapped into in September. So we could definitely get a pull deeper into this zone. On the bigger picture, let's zoom out real quick. So even go to the monthly. We have a monthly supply zone above, right? So it's super skewed because it's just going over to the side. But we have a monthly supply zone that formed back here. With a pretty decent imbalance that started selling it pretty much the entire sell-off that we've been seeing for the past couple months. I think even going back into, it wasn't going back into 2021, but starting in March, in April, this supply zone was formed here. So it's major resistance above us at the point we're at now. But keep in mind we have been trending up for the past couple weeks, for the past couple months actually. We've been slowly trying to make our way back up. So keep that in mind. It looks pretty bullish right now, even though in the grand scheme of things, we're in a massive downtrend. Right now, we're trying to work our way up. So for the bulls this week, we really want to see, since we did try to start breaking out of this trend line channel here, this upward channel, we did try to start breaking out. We want to see price hold above. We really want to see price stay above this 40.70 area, and go no lower than this 40.57 area. If we're going to see price continue to head up, we have this huge gap over here, right? Well, not huge gap, but there's still some gap left until we can fill this zone, right? So price can definitely get above where it is now to fill this big red candle gap to the left and come into these zones before we see a down move or before we see price start to slow down a little bit and pretend like it's going to reverse on us. And we could also see once we do get up here and get past these zones, breaking above the zone and going higher, heading into the monthly supply zone, which is definitely something that could possibly happen because we have these highs over here. This could act as liquidity that we could take out those highs, tap into the zone before we potentially start reversing, right? So this is pretty much the bull case scenario. You guys got to remember, for anybody who's watching this trend line, for anybody who's watching this channel right here, sellers are piling in at the top of this channel, right? So it happened before when this first formed. Let's give it those 3 touches. Sellers were here. They tried to come in here. They did come in here at the top. And now there's possibly sellers that are trying to come in here after we got this huge move up. So there's going to be a lot of people. There's going to be a lot of stubborn bears who are like, okay, it's time to short this. We got to pop. Let's short the pop. And there's possibly sellers that are trapped. So I'm going to get into that at the end of the video. You guys know I like to include a psychology piece at the end of the video. But there's possibly sellers that are trapped at the top of this range right here. And they could get squeezed out heading into these higher zones up here. And even when we get to the higher zones, there could be people that are trying to sell like back here, right? So they previously sold back here. So more sellers have a chance of entering the market back here. And if buyers overcome them, those sellers are going to get squeezed out and we're going to get a move even higher. So that's the bull case. The bear case is we begin to reject at this zone like we already have started to slow the momentum. On smaller time frames, we're starting to get change of characters, moves to the downside, but we're not really getting any break of major structure to the downside on the lower time frames. So until then, we're still this bull trend is still intact. The other day, what was this, Friday, we did get a huge move down, but we came into the zone, bounced off the zone, and continued our move higher. We haven't put in higher highs yet, but that could happen sometime during this week. So that's just something to pay attention to. But if not, this could be the beginning of us rolling over for the bears right here. We start rolling over. All of the buyers that were aggressive, that tried to continue to buy up here. Some buyers got wiped out here. They came back into the market. If sellers start stepping up at some of these zones that were created when this imbalance happened, this could be the beginning of a move down to the bottom of this range, right? So we could either come back down to the bottom of this trend line, which also has confluence with this demand zone that was created back here, right? So falling right back into this trend line where demand is also there, that would be our target for anybody who's looking to go short from up here, right? You could enter here. You could enter, somewhere under this zone. Let's say you enter under this zone. When this zone got invalidated, if sellers came in and broke this zone, back under this zone, this would be my target. This would be my first target to see if buyers come back into the market at this demand zone. If not, it's also another great area to go short, as we have the bottom of the trend line and this demand zone giving us confluence. If buyers fail to come into the market and sellers step back in, we can get a break. But I would definitely encourage you guys to be careful, because the same way that it faked buyers out up here, if we're going down, the same way we trapped buyers up here, gave them a fake breakout, and then started heading back down, the same thing can happen to the sellers. We get a break of this demand zone, of this trend line, get a down move, and shoot back up. So to avoid getting caught up in there, wait for the break, wait for the retest, signs of a rejection of this zone again, signs of rejection of the trend line, and then enter for short. And then we got a pretty nice target. I would target somewhere around here. These lows over here will be my first target. So let's clean up the chart a little bit. Oh, that's not what I want to do. And then we're going to move on and look at SPY, just to put it into perspective for the SPY traders. Again, you guys know I chart ES. I trade futures. I'm coming from trading SPY options. So it's pretty much the same thing. I used to chart and watch ES when I was trading SPY options. So if that's not something you guys have done, that's something you guys can do. Looking at SPY is the same thing though, right? Less on the chart, but pretty much the same exact scenario. Same range, same channel that we've been trending upwards in. You feel me? We're back at the top of that channel. We have this major supply above. So if we if we break through and we continue to head higher for the bulls, watch out for the supply above. And if buyers are still present, we break above that, we can get it move even higher into the bigger supply that's above, which was formed by a monthly zone, right? So that's definitely something to pay attention to, as it is a stronger zone. And that's you wanna be careful of going long in supply. You definitely want to see signs of buyers being present. You want to see price continue to move higher. You want to see strong candlesticks continue to move up and just rip through those levels. And that's the bull case. Same exact thing as ES. For the bear case, we fail. We stall off at the top of this range tomorrow. You guys see more breaks of structure to the downside on smaller time frames. And of course, if we can take out these lows here, then it would definitely be a good sign to target the bottom of the range again for any bulls that want to participate in the market, right? So on the higher time frames, we definitely want to see those structures get taken out. On the lower time frames, watch to see if this rejection happens at the top of this range, and so we can get some more downside. Real quick, looking at QQQ, the Qs, a little bit of a different story, as but not really, right? We still have this major resistance here that was formed in the past, right? So I didn't mark up any supply zones, but we do have this resistance here, which is something to pay attention to. It was tapped 2 times already, so we pulled into it more this time. Of course, took out both of those highs. That's how it works. And we could potentially get a run above that into the next resistance for Qs. And this is the bull case, right? So if we do break and hold above, we could get a run to the next resistance. Same thing with ES, same thing with SPY. If we break and get above, then we can run, considering all the sellers that are trapped. So sellers stepped in here previously. Sellers stepped in here previously. Sellers are trying to step in here now. If those sellers get overcome by the bulls and they get stepped on, they're going to have to get squeezed up. We're going to get a move higher. Similarly, on the flip side, for the bears, if you guys can defend this resistance right here, if we can defend these resistance, after the bulls have tried to just break above, we trap some bulls. If you guys, the sellers can step up, and the bears come in and do their thing and squeeze those sellers that just piled in over this, that tried to trade this breakout here, you guys can squeeze them out. We can get a lot of downside. So it's pretty much the same thing for all of these charts. Just to double check everything again, let's go to, where's NQ? Let's go to NQ just to check. Same thing as Qs. We're at resistance. We're still trading upwards. We're still trading upwards. We're still within a little channel here, and we got it. We just have to take out those highs and stay above those highs for us to see a bullish move until we can get into a higher up resistance somewhere up here. And I really honestly wouldn't be surprised. We've seen it in the past. Let's go back and look at let's look at SPY real quick again. We've seen it in the past plenty of times. Whenever it looks super bearish in the market, maybe SPY's not good. Let's look at ES. ES has less stuff on the chart. Whenever it's looking super bearish, sometimes we get a bounce, we get a catalyst, we get a bounce, and we run. It was looking super bearish back here, October 2021. We ran to all-time highs again, right? It looked bearish again. We ran. We got scared. FUD came in. We sold off. We ran again. So the market doesn't go straight down, just like the market doesn't go straight up. It's understandable. We came here. We took out lows back here, and we made a move lower, and then the market starts going up again. So I would not be surprised if we got, into this zone or above this zone to tap into the monthly supply before we got to move back down. I really wouldn't. It could really go either way. So it's very important to just read the charts, pay attention to what the market is telling us this week, and execute. Don't hop into anything that looks extremely obvious, because the market is designed to make it look like one thing is going to happen and the other thing happens, right? So same thing. If they want to trap sellers, the market is designed to make it look like sellers are winning here at the top of this range before it turns around and reverses. That way it traps all of the sellers and it fuels the move higher. So the market is literally designed, to appear like it's doing what you want it to do, and it's not. So don't be quick to rush into anything. Don't be quick to just, full size into breakouts. We want to see breaks and retests. We want to see break and closes. We want to see things like that. We want to see huge buyers on level 2 get wiped out if you're on the bearish side, and we want to see huge bears on the level 2 get wiped out if we're on the bullish side. And we really want to pay attention to how price is moving as far as the candles that are forming, big green body candles. We don't want to see lots of wicking. We don't want to see momentum slowing down, because it could easily reverse on us in either direction. So that's pretty much it for the analysis part. I want to talk about the psychology real quick, and when it comes to executing any of these trades, because like I was just saying, it could really go either way when it comes to this. When we get to critical levels like these, we've seen it in the past. Anything that looks too obvious is probably a trap. The market is just, as I was saying earlier, the market is designed to make it look like it's doing something. All of the people who are trading trend lines, all of the people who see a breakout, all the people who see a bounce, they're going to fall for it. They're going to go in, and then the market's going to do the opposite and use them as liquidity to fuel the move. So you really got to make sure you're getting extra confirmation, and you're taking your time when it comes to executing on days like this. But it's definitely setting up to look like a good week. We have wicks here, which is also something that we can pay attention to, because as we were talking about the price action, right? We're from a big green candle, now we're getting an indecision candle, a wick. This was a bullish wick here, but we're opening up with another smaller candle. So pay attention to the candles, pay attention to price action, pay attention to order flow, and really just make sure you guys have all your ends covered before you guys execute, before you guys jump into anything. Let the market develop. I say this every week. Let the market develop before you make a decision. You do not have to be the first buyer as soon as price breaks above a key level. You can allow price to break above, come back, and show you there's continuation. You guys don't have to rush into anything. One of the biggest things, or the biggest mistakes I was making when it came to my trading, was rushing in. I was so afraid to miss the move so early. I was always taking aggressive entries when we came into zones. I was just so afraid of not being able to make money if the play was going to work, right? And if everybody else was going to make money, right? FOMO was a different form for me. It wasn't that I was chasing. It was I was getting in too early because I didn't want to miss the move. There's going to be plenty of move to catch. There's plenty of volatility in the market still. It is December, but the market is still moving and still having crazy swings. There's still volume in the market. Maybe it'll slow down as we get closer to the holidays. I don't know. Maybe next week, we consolidate around the levels that we're at now and build up some more participants in the market so that we can shake out more people. I'm not sure. Just pay attention and trade smart, but practice caution, right? But that's all I got for you guys this week. Hopefully it's an interesting week. I really think we can get some good moves out of this week. If not, stay patient. Don't force any trades. And I'll catch you guys in the next one.